It's January 12th, 2026, and I'm witnessing something unfolding in the markets that I haven't seen in 12 years of tracking this sector. The financial networks are doing their usual thing. Green here, red there. CNBC is talking about tech stocks. Bloomberg has some talking head explaining how resilient the markets are, but there's an eerie silence about what's actually happening right now in the metal markets. Now, here's the twist. Over this past weekend, something massive went down that no one's talking about. Jerome Powell, the chairman of the Federal Reserve, the man who controls the money printer, has just been hit with a criminal investigation. And no, this isn't some minor ethics review. This is the DOJ looking into his 2024 testimony before Congress and some questionable office renovations. While the media is telling you everything is fine, they're ignoring the real story. While you were watching the football game, something huge happened in the silver market. The price of American silver eagles, the benchmark 1-O's coin that every silver stacker tracks, just crossed $100 at major dealers. Not the spot price, which sits around $85.55, but the price you pay at the dealers, $100. That's not a typo. That's not a temporary spike. That's the new floor for physical silver. And it happened in just 48 hours. So what does this mean? Why does it matter to you? The Fed just opened Pandora's box. And trust me, they're not going to like what's inside. Stick with me, because I'm going to show you exactly how this investigation has shattered the illusion of Federal Reserve independence and why that's driving a massive shift into hard assets. The question now is, how far will this go? Stay tuned, because we're diving deep into why $100 isn't the ceiling. It's just the beginning. Let's step back for a second. What's really happening here is bigger than just a silver price spike. This isn't an isolated incident. It's a sign of a much larger shift. The silver market isn't just reacting to supply and demand anymore. It's now a crisis proxy, a safe haven for investors who no longer trust the system. You've heard the saying, when things go wrong, people flee to safety. But right now, they're fleeing from something much bigger than just inflation. This is about trust. Trust in the institutions that have held up the global financial system for decades. And once that trust breaks down, it changes everything. Here's the question you need to be asking yourself. What happens when the people who were supposed to be in control aren't trusted anymore? What happens when the very institutions that claim to keep the system stable start to look anything but? That's the real story behind this silver spike. It's not just a blip on the radar. It's a direct reaction to the crumbling perception of the Fed's independence. And if you think this is just a one-off, a temporary jump in price, think again. This market is telling us something much more dangerous. Now, why is silver suddenly acting like this? And why are major dealers pushing their prices above $100 per ounce, even though the spot price is still under $90? That gap, the one you're seeing between the paper price of silver and the physical price you're paying, isn't some glitch. It's a signal. It's a sign that the paper market is being decoupled from reality. And when the physical market starts setting its own price, things are about to get real. Here's the thing. The physical silver market has just shattered the illusion of control. And this isn't just some minor fluctuation. It's a full-blown decoupling between the paper market, what you see quoted on your screen, and the physical market, where real people are actually buying silver. Let's take a look at the evidence. Silver eagles, those iconic 1-O's coins, are now crossing $100 at major dealers. But the spot price, the one you see on the ticker, is sitting at $85.55. That's a 17.5% premium. Let me break that down for you. In a normal market, premiums for silver eagles run between $3 to $5 over spot, maybe $8 if supply's tight. But this, 17.5%, this is unheard of. Now, pay attention to what's not being said. The dealers aren't just marking up prices because of a little supply shortage. No, they're marking them up because they can't keep up with demand. People are buying anything they can get their hands on. American silver eagles, Canadian maples, generic rounds, whatever they can find. They don't care about the price. They just want to get silver before the next big price hike. But here's where it gets interesting. The real price of silver is no longer the one you see on the screen. The real price is what you're paying at the dealer's shop. And right now, that's $100 per ounce, even though the spot price is still showing $85.55. markets. Why is that happening? It's because we're witnessing a shift in how silver is being traded. We're no longer just talking about commodities. We're talking about a flight to safety. People are rushing into hard assets like silver because they're losing trust in the institutions that have held up the financial system. And once trust starts to erode, everything changes. The question now is, how long can the paper market keep this illusion alive? The gap between paper silver and physical silver is widening, and the premium on physical silver is rising faster than anyone expected. If you think this is just a temporary spike, think again. The next move might be even bigger. Now let's talk escalation. This situation is intensifying, and it's not just about silver prices anymore. This is starting to feel like a crisis in slow motion, one that could eventually shake the entire financial system. Think back to the 2008 financial crisis. The system was teetering on the edge, and central banks had to step in to keep things from collapsing. What we're seeing now isn't quite the same, but it's the same pattern. The trust in the institutions that are supposed to keep everything stable is starting to crack. You might think this silver spike is just a temporary blip, but this is the kind of move that signals something much deeper is happening. When silver breaks $100, it's not just about a shiny metal. It's about people scrambling to find something real to hold on to when everything else feels like it's on shaky ground. This is a dangerous moment. The paper market for silver, what you see on your screen, is being controlled by institutional players who have an interest in keeping the price low. But the physical market, it's in price discovery. It's telling us what silver is truly worth right now based on demand. And that price is rising fast. The question now is, how long can the paper market keep this illusion alive? The gap between paper silver and physical silver is widening, and the premium on physical silver is rising faster than anyone expected. If you think this is just a temporary spike, think again. The next move might be even bigger. Now, let's take a closer look at what's really happening here. This isn't just a market anomaly. It's a full-scale collapse of the narrative we've been fed about silver and its price stability. I want to show you some stronger evidence, and this is where things start to get really disturbing. Major dealers across the board have raised their prices for American Silver Eagles to over $100. In fact, some dealers are even listing them at $102, $105. This is happening while the spot price of silver is still sitting around 85.55s. You see that gap? It's growing, and it's a divorce between the paper price and the physical price. But the real kicker? While dealers are raising their prices, the spot price, the one quoted on your screen, continues to be suppressed. Why? Because the paper market is being controlled by institutional players who have no intention of letting the price go up. They want to keep silver cheap to maintain their control, but the physical market is fighting back. And here's where it gets real. That $100 price tag, it's not the ceiling. If this continues, you could see silver priced at $150 in the physical market, while the spot price still shows $100. That's how crazy this market is about to get. You think that's impossible? It's happened before in other commodities when fear-driven demand outstrips supply. The rumor circulating in the institutional desks right now is about a potential delivery default in one of the major London Bullion Market Association vaults. If this is true, and we can't verify it yet, it could cause a massive short squeeze in the silver market. Major players who thought they were holding silver on paper are going to scramble to buy physical metal, and that's going to push prices even higher. Fast. Things are escalating quickly. And in moments like these, everything happens at lightning speed. Let's break it down. Over the last 48 hours, we've seen a series of developments that are starting to stack up, each one adding pressure to an already volatile situation. First, we've got the DOJ investigation into Jerome Powell, which has already shaken investor confidence. Then we've got physical silver premiums soaring, $100 for American Silver Eagles when the spot price is still sitting around 85.55. That's a clear sign that the paper market is losing control. But it doesn't stop there. Now, let's talk about the volume. A contact of mine at a mid-sized dealer in Texas told me that their Saturday sales were 4 times the normal weekend traffic. People aren't just buying a few coins, they're stocking up on anything they can get their hands on, eagles, maples, even generic rounds. Why? Because they're trying to get silver before the price goes even higher. But here's the real question. What happens if this continues. What happens when the physical silver market completely decouples from the paper market? If demand keeps soaring and inventory continues to tighten, we could see silver prices explode in ways we've never seen before. Retail investors could get priced out of the market entirely. And once that happens, you won't be able to get your hands on any silver at any price. Now, let's shift focus to something even more personal. How does this all affect you? We've been talking about the market shifts, but what's at stake here is bigger than just a price movement. It's about real people and the choices they'll be forced to make. If you're holding savings, if you're concerned about the stability of the financial system, then this crisis might already be knocking on your door. People aren't just buying silver because it's a good investment. They're buying because they're scared. They see the cracks forming in the system and they're trying to protect what they have. You might be thinking, now why should I care about silver? What does this have to do with me? The answer is simple. When people lose faith in the system, they flee to hard assets. Right now, that means silver. And if you're on the sidelines, it might feel like you're missing out. But if you understand what's happening, you're in a position to make an informed decision. If this situation feels familiar to you, let me know in the comments. Because this isn't just a numbers game. This is about understanding the true cost of what's happening. And when people start to panic, the prices won't just go up. They'll go parabolic, but only if you're paying attention. At this point, the outrage and panic are easy to see, but what we need now is perspective. We've all seen the headlines. We've all felt the tension in the air. But let's take a step back and look at what's really going on behind the scenes. This isn't just about a sudden spike in silver prices. It's about the mechanism that allows this to happen, the underlying system that's driving this chaos. The truth is, this is all a product of leverage, spectacle, and fear. When trust in institutions collapses, people rush to anything that feels stable, anything that feels real. And right now, silver is the most accessible of those assets. But what's truly unsettling is the realization that this entire system is built on a fragile foundation. The paper market for silver, the futures market, is being suppressed by institutional players. They want to keep the price low to protect their interests. But the physical market, it's telling us something completely different. It's telling us what silver is actually worth when people want to hold it, when they need it as a hedge against an uncertain future. And that's where the danger lies. When the system starts to unravel, price discovery becomes violent. It's no longer about what the market should be worth based on charts and trends. It's about what people are willing to pay when they believe everything else is about to collapse. So what happens next? There are two possible paths forward, and both are uncertain. We're at a crossroads, and where we go from here will depend on how the institutions react. First, let's look at the conservative scenario. Let's assume the premium gap stabilizes at 17.5%. If spot silver hits $100, then physical silver, like the American Silver Eagles, could end up priced at 117. That's a 17.5% premium on top of the spot price, but that's the conservative case. What happens if things go even further? Now, the stress test scenario, this one's a bit more extreme, but it's based on the data we're seeing. If the rumors about the LBMA short squeeze are true, then we could see premiums soar even higher. Imagine a 50% premium on top of a $100 spot price. That puts physical silver at $150. And I'm not talking about a theoretical price here. If this delivery squeeze happens and institutions start scrambling for silver, this could very well become reality. But here's the kicker. None of this even considers the outside factors, the geopolitical uncertainty, the financial instability, all the things we're not even factoring into these models. We're not even talking about a war, a global currency crisis, or a black swan event, things that could completely blow these projections out of the water. And that's the crazy part. Right now, it's all momentum. There's a sense of fear that's pushing this rally, and it's building faster than anyone could have predicted. We've been through the facts, the numbers, the scenarios. But here's the one deep, memorable insight you need to take away from all of this. The system is breaking down. It's not just about silver or gold. It's about the fragility of the entire financial structure that's been built on trust. Trust that's now in serious jeopardy. The Department of Justice investigation into Jerome Powell has cracked the illusion of Federal Reserve independence. And once that trust is gone, everything changes. We're not just watching a silver rally, we're witnessing a shift in how people perceive the value of their money. When the paper market collapses, the physical market is where people are moving. That's the reality. $100 silver isn't the top. It's the start of a massive repricing. The physical market is showing us the truth. The paper market is lagging behind, trying to hold it all together with margin hikes and margin calls. But in the end, when the dust settles, it's the tangible assets that will matter most. So what do you do now? Stay informed. Keep your eye on the physical market, not the ticker. The game is changing. Don't be the one who misses it. For more insights, more analysis, and more updates as this story unfolds, don't forget to follow and subscribe. You need to stay ahead of what's coming next. The world is changing fast, and we're just getting started.